TGIF Warriors, how's everyone doing today? Hope everyone had a decent week. A couple of things I want to talk about. Guys hear me okay? How you doing, Brock, Kevin, Alexander? Hi, Arena. Sinatra, how are you? Hugo? TJ, how are you? Pretty good. Kevin? Pot stocks, yeah, they blew off yesterday. Tilray, buddy of mine told me to buy it at 5. It's only a few months ago. Went to what, 45, 50? Amazing. So, I mean, you could have been long anything in the last 3 months, right? So, I just want to start off with the S&P here. You know that I thought there might be a chance for another push because of this RSI reading up here. There was no divergence with a 73 reading. And then started watching, you know, the first shot across the bow. They tried to take it down again yesterday and held, and then last night started to look like a triangle to me. And to me, it could be, I'm just guessing, a wave 4 triangle. And the implications of a wave 4 triangle is that there's one more thrust to the upside, which is terminal for 5. And I'm thinking 39.55, 39.60. Thought it was going to happen this week. Of course, if we start breaking down under 38.90, that's a different story. But to me, it looks like this is a little continuation formation, and maybe we break out today. You know, today is the Lunar New Year. And if you just think back a year ago during the Lunar New Year, it's a big holiday in China. And last year in China, you know, that's when everyone travels. That's when the pandemic began, and the Chinese were traveling everywhere in their country, out of their country, everywhere. So I know it feels like 10 years, but it was only a year ago when our world changed. So happy Lunar New Year to you. Okay, so that's my view here. I will take a stab up here. Best guess around 39.50 to 60 up here if we get up there. Maybe it's a Monday, Tuesday sequence, but you know, it could happen today. EG is trying to turn, you know, which is going to change what your preferred shorts are. But, you know, I look at this down here in EG, and that's not ideal for the market to bottom at 26, even though if you go back here, it's a divergence, but not strong enough. I think we could get another washout, and this time it won't work. And one of the reasons for that is when you look at the pound on multiple time frames, these highs were confirmed, which on the 2-hour, on the 4-hour, on the daily, no, daily, you know, it's just been a sideways RSI pattern. But on these, we need a new high because, you know, I'm a big believer that markets rarely peak on confirmed highs to the upside, right? And when momentum is confirming, which it is. Okay, and Euro was contained. This was my target last Saturday, 21.50 to 60. But you know, we get through 21.50. There's something else happening. Maybe we could get up to 22. The dollar has bounced, okay, but I never really got to the 61.8 level. So this would kind of make sense if we had one more break in the dollar. You know, that should give a lift for the wave 5 thrust in the S&Ps. Also, the oil market, I thought we might have a 3. It could still happen. We had one divergence, but it doesn't have to. Sometimes you get 2, it's enough. All right, but now the 4-hour was confirming everywhere. I mean, this was a huge momentum reading right here at 88% in the crude. So this time, if we made a new high in crude, the RSI, I think, would struggle to get back to 70. So, that's something to look for next week. You kind of got a little bit of a feel for what could happen. And I'm talking about Canada putting in a higher low. You could build a case that maybe we're getting a right shoulder here in USD CAD. But if that's not the case and the dollar has one more dip to the downside, Canada could make a third drive bottom down here. But I'm really stalking Canada and crude. On a weekly basis, I believe we're still lower on the week, trying to put in a reversal week. And the off number, if by the end of the day we're closing over 127.74, which is 50 pips away, 47 pips away, you're going to have a reversal week. So either way, I think we're getting close to a bounce that could take us up to, maybe 130, 129 and a half up here. Gold keeps on taking it on the chin. Really haven't changed targets. 1687 has been a target for me for a while up here. People thought I was crazy that we could even break to 1687. It's possible we could even, take this out, but it is a 2.618 fib extension. And, we're not that far away. We're 130 away. And silver has a little better bid than the gold, kind of an inside week in the silver. Maybe we get this A, B, C. If silver rallies with the market next week and the market's making new highs and all you get is a fib retracement in silver, that too would be a short candidate for me. So, we don't have as much time. I have Charlie Gasparino with us today. He's a contributing editor on Fox Business and a columnist for the New York Post. And we're going to talk about some of the things he's been covering on his beat.
Like, what are you going to be talking about specifically, Dale? You're going to talk about markets, about equities?
Well, a lot of his articles, I'm going to be talking about, he wrote a piece about, Robin Hood regs, how it would hurt the little guy. And, Steve Cohn reopened his hedge fund after GameStop blow up. I think he was on the wrong side of it. And, I also want to address the new SEC chairman, Gary Gensler, which a lot of us know because he ran the CFTC, and what kind of stamp he could put on and perhaps create a new landscape of regulations for Wall Street. I don't even remember the last SEC chairman, but Gensler is pretty well known, came from Goldman Sachs. So as a banker, but has gone through a transformation in his career. So those are a few of the topics.
Yeah, so coming from Goldman Sachs, pretty sure he's gonna, establish the best type of regulation ever. Wall Street to begin with doesn't need regulation. It needs enforcement of existing regulation, which is non-existent.
Okay. Well, Gensler, according to Charlie's article, I don't want to give the whole interview away, but, he got very close to Yellen and, has adopted, he's not, exactly, and not just Yellen, what's the name of that? Senator Warren. Okay, so he's gone left in the last few years or so, handful of years in his career. So he's not the same guy that left Goldman. That's the point.
It's even worse, you're trying to describe.
Well, I think
if you want to save economic policy by being close to Warren, good luck.
Yeah.
Really good luck.
Anyway, look, they're talking about a lot of things. A buddy of mine told me about this. It's someone talking about all these, short squeezes and everything that's going on, that there's even talk of a day trading tax, which would, really not be good for anyone.
Oh my gosh, could you imagine?
Yeah.
Yeah, I mean,
Yeah. And different wealth taxes for people that, just sit with investments that they haven't sold in their portfolio that,
we are at 2020 and they still haven't probably realized that when you tax it, wealth just vanishes and goes elsewhere.
2020? Really?
I mean, speaking like, rounding it up. And
Back to the future.
Go home. You're drunk.
You'll try to
take his keys.
You'll try to, you'll try to overtax wealth, and wealth magically will just leave, and then you can tax more, less, a lot less actually.
Oh, and the other big news is I had my first COVID vaccination, and I know all my friends are telling me about, which one I got and what the repercussions are.
Which one did you get?
The Moderna.
Oh God, you're gonna die.
No, I heard that my penis will fall off within a week or so.
But guys, you're gonna have 6 toes on your right foot. That's awesome.
You have a penis?
Yeah, but I only use it really for one thing lately nowadays. So, what's the big deal?
Well, aren't you excited, Dale, that you get to go make out with a bunch of women when, after you get your second vaccination? Isn't that going to be great?
Yeah, that would be. Yeah, thanks, Blake. You've given me hope. You've given me hope for the future.
All right.
Well, anyway,
I mean, hey, look, congratulations, Dale, and I'm excited for you. I mean, just
thanks, man.
I don't think getting a vaccination, just gives you, free reign to just be crazy, but at least you got some protection there, and
a little bit. Yeah.
What's that?
Yeah, a little bit. I mean, all the variants. I don't know if these vaccines, there'll be boosters coming down the line, but I'm just kind of doing my bit for a move to herd immunity that will never happen here in the U.S. So, actually, I think that everyone who wants the next problem is there'll be too much vaccine and people won't want to do it. But if you want to travel. And Steve and Stella, I was going to say that, once I'm vaccinated, I think even Greece would accept me flying in there, wouldn't they?
Oh, yeah.
Yeah.
See, so it does give you some freedom
I think
travel.
It will. It's almost like a robbing us of some of our,
freedoms.
Our freedoms as humans, but I mean, it's such a difficult topic. Anyway, hey, I want to congratulate you. I want to talk really quick about a couple of things, because we have a great interview coming up with Charlie Gasparino. I think that's going to be awesome. It's going to be awesome to hear his take and his insights on what he's heard on the street from, all the topics that you've discussed, from, Robinhood to what happened with GameStop to potential regulations. What's Elizabeth Warren's, role in all this? How's Janet Yellen going to see things? His insights are going to be pretty valuable. I think I like Charlie Gasparino because, I've been listening to him for over 20 years, at least, but back when he was on CNBC and before he joined Fox, obviously. But more importantly is he gets a lot of great insights. I think he's got a great beat on things that are happening. And so it'll be really interesting to hear his take on things. So guys, don't miss it. It's going to be probably pretty cool. Now, but before we get into that, I definitely want to give Stelios and Steve some time to update everybody on some things that they see in the market. But I want to point out the US dollar Norwegian Krona. This is a currency pair that I've kept a really close eye on, and it's rejected some resistance multiple times. But, when I look at a support or resistance level that I think is critical, I think of it kind of like, you think about an old castle and, you got the knights coming up to a castle with a battering ram, and they're eventually going to break through the front gate, but it's, they hit it once and, you see that hairline crack, it hits it again, and, and then it starts cracking, and eventually they break it open, and all the opposing forces rush in, the same movie that you guys seen every time. That's the same thing that happens in currencies when we hit key resistance, and it seems like there's a lot pushing behind it. And let me just lay out a couple of things for you. So if you're looking at the US dollar, Norwegian krona, you have to take into account not only is it the US dollar, but it's also Norway, which also is a huge exporter of crude oil. And I'm going to talk about crude in a second as well. But what you're going to notice here is that the US dollar, Norwegian krona has knocked its head up against what I feel is key resistance between 865 and now 872 a couple of times. But I want to show you previous support, and this is from keep in mind where we went. And I think Steve said this the other day, and I'm going to have to put it out there. This US dollar, Norwegian krona at 12, in my opinion, is a generational high. Meaning, I don't think I'll see this the rest of my career. I don't say that often about the markets. You guys that have known me for over a decade know that I said that about the US dollar Canadian here in the 80s. This was a generational low. When we hit that in 07, for those of you guys that were with me at that moment, the next day when I was on the Morning Edge broadcast after, in 2007, I said that was a capitulation, and I bet you that's a generational low we'll never see again. And that has proven to be the case in my career. Now, I don't know how many years I got left in me. Let's hope 50, maybe 30, maybe 20, who knows? But we've got a long way before we get back there again. You look at the US dollar, Norwegian krona, I do feel that might be a generational high. And so when I look at the US dollar, Norwegian krona now, I take that into account. It's like, okay, I know we were up at 12. We're not going to get up there again, but I could see us getting back towards 9.5, 10, 10.5. It depends on a lot of different things. It's not, it's not like, oh, I see it developing now, we're definitely going to 10. That's not it at all. I think that there's room for a recovery here. Now, we are building a base. Whoops, I didn't want to do that. We are building a base in the US dollar, Norwegian krona, in the crown, or in the kroner, or in the krona, however you want to pronounce it. I pronounce it differently. Depends if it's 4 o'clock in the morning or 6 o'clock in the morning, which happens to be 6 right now. So, but we keep knocking our head up against this 865 level. A break above 865, in my opinion, is going to be more of like that battering ram going through the castle gate, right? We're still far from there, but what you can see is we're now approaching this multi-month trend line once again that has really capped the US dollar, Norwegian krona a couple of times. We had that move up to 872. We had the move to retest the 865. Now we will tag it once again at the 853 level, which we're only a couple hundred pips away from there. But what you're going to notice is there's also like a 200 period moving average that comes in right there. This is a 4-hour chart. So that there's a lot of confluence right there. And we did complete an AB equals CD. We had a little false breakdown below this trend line here this week. So I think that there's, and I need to mention GDP numbers last night out of Norway were strong. Did you guys see that?
Yeah, I was going to mention that. That's a very good point.
Yeah. Their consensus was for quarter over quarter, or I'm sorry, Mainland quarter over quarter consensus was 1.2%. They
Came in at 1.9.
1.9. Yeah.
Yeah.
So I mean, dude, that's good, right?
In the old days, when GDP beat like this and oil was rallying, the Krona was just flying, and now it's doing nothing. That really worries me.
So yeah, so now think about that, Stelios. You think about what's happening there. We had this huge beat. Norway didn't go anywhere. That I think is a product a lot to do with what's happening in crude oil. Okay, and crude's had a hell of a rally. If you're ForexAnalytix subscribers, we've been looking at this, on our daily roundup and other, the in about an hour during the FACE webinar. Completed AB equals CD, long-term, multi-month trend line coming into play, 88% retracement, we're overbought. So now that we're starting to tail off a little bit, and I'm not saying crude's going back to, in the mid 20s, but crude could obviously fall back to 50, maybe even back to the high 40s, depending on, expectations and, depends on risk appetite, yada, yada, yada. But if crude even starts to blink and pull back towards 50, where's that put the US dollar Norwegian krona? So I'm just pointing out something that it's an actionable idea, in my opinion. Hopefully you guys can take advantage of it. Hopefully it sets up good for you. And with that being said, let me mention one last thing before I go. I'm going to pass it over to Steve and Stelios. But guys, if you are a ForexAnalytix subscriber, take advantage of the Live Squawk live audio broadcast, the Squawk. If you go directly to Live Squawk, you will pay more. If you are a ForexAnalytix subscriber, you'll have a 20% discount off of their price. It's what we get their service for. We just pass that savings on to you. So you could even be a light subscriber, which is $19 a month. And this way you can listen to the FACE webinar in an hour. You can listen to the daily roundup. You can listen to European crossover. You can get an app. You could get our analysis. Then you can get Live Squawk for a savings, and basically you would get you'd be getting you'd be paying for ForexAnalytix Lite for basically peanuts. So anyway, guys, enjoy it. And it's quite awesome. It broadcasts all through Asia, which is really nice because I was using a different Squawk service that only stops after North American trade. And then I have to switch over to Bloomberg, and Bloomberg goes all night. But this guy, their broadcasters are more knowledgeable, in my opinion. Okay, I'm gonna let you go. Lucas says, "What do you do with the Squawk? Useless for trading?" No, it isn't. No, it's a Squawk of like news, like breaking news that comes out. I can't tell you half the times that I'm like, I would be, writing an email or, doing something. And all of a sudden I hear this, news headline come out and I'm like, holy crap, I missed that. And then, I'd go right to it. So, and then I go reference whatever currency might have been announced in a Squawk. So it's important because they're announcing news events or headlines as they're hitting the wires. So anyway, it's great. It's very nice to have. It's like having an extra set of an eyeball actually keeping an eye on breaking news all the time for you. And then as soon as they see it, they rattle it off. It's great stuff. Okay. I'm going to let you guys go. Dale, oh, well, he's not, he
We're here
out for a second. Steve, Stelios, how you guys doing? I'm going to let you guys speak for a moment before Charlie Gasparino gets here. So
yep, we're good. And I the Squawk service, I have like 2 or 3 sources for news where it's coming out in text, but you can't be looking at everything all the time. So you have somebody just saying it loud. I think it's so useful. Anyway,
I got 8 screens in front of me, and like half the time I'm like doing some chart work, or I'm reading an email, or I'm reading some analysis, and then all of a sudden it's like blur alert, and then I hear something happens and it grabs my attention and it pulls me back over to what I need to be focused on, which is, what's moving. So anyway, it's a great service to have.
Yep. Okay. Thank you, Blake. So how are you doing, guys? Everything good? Things are good over here. What did we have overnight? Well, Blake mentioned the Norwegian GDP print. For people who follow the Krona, it's definitely something to look at. And as we said before, I'm worried, and I said this last week, I'm flat Norway for the first time in years. I'm always long Norway, so short dollar Norway or euro Norway or both. I'm now flat because I'm really worried about this price action. All the good things that could happen and that could drive the Krona higher are happening, and it's not going higher. So
yeah, technically speaking, though, Stelio,
I agree. I agree.
This consolidation doesn't look bullish on the other hand, right?
No, it doesn't. It doesn't. And I will be looking to short again dollar Norway and euro Norway. I just think we're due for a bounce. I don't know what the catalyst is going to be. I think we're due. But anyway, it's been a really good run from the highs, so better to be a little bit safe. Okay, what else do we have? We had some UK data for people who care. GDP came in better than expected. This is for Q4, and it came in at 1% quarter on quarter. I think this is the final reading for Q4. And industrial production, manufacturing production, slightly worse than expected. Trade balance slightly better. So overall, it was not bad. And remember, these numbers were for December, though. So we still have to wait and see what happens for the next ones.
Yeah.
Which are not going to be pretty, I think.
Yeah, I assume as well.
And I can have proof that things are not doing well in terms of trade and all that, because I ordered some stuff from Amazon UK in early December. Most of them
you're still waiting for them.
Yeah, I got one of them, and most of them are still on the way somewhere. So I'm just waiting. But yeah, there's gonna be a difficult period for the UK. I think this year is going to be difficult. In the long run, the very long run, outside the EU, it's not. I don't think it's something that I would want to be, but I can see some benefits and I can see why they voted for it. And I think in the long run, the UK is going to be the UK. They're going to be okay. The only problem I see is that you get a lot of people moving out now, and I have lots of friends who are bankers in London from my time there, and many of them have already moved to other European cities, and so they're losing people. And what happens when you lose these kind of people? Well, the housing income. Lose income. The housing market is not as supported as it was before. It's a little bit of a wave that carries everything. So I think they're in for a year or two of a little bit of difficulty, but then after that, I think things will settle down wherever they settle down. And apart from that, there was not much overnight. I'm waiting. We will have Michigan consumer confidence, consumer sentiment number today, and also the federal budget, and that's expected a very, very big negative number. But who cares about that?
Yeah, I mean, yeah,
it's just numbers.
We've hit now the milestone, Stelio, that the budget deficit.
Go on, Blake.
Sorry? I was just going to say, can I just mention once again that economic data does not matter at this point.
Exactly.
Yeah.
Sorry.
We've reached the amazing point now. We just crossed the milestone. Yeah, and at the same time, the Rubicon, that the US deficit is larger than the government income from taxes.
Incredible.
Meaning that even if you needed to do absolutely nothing with taxes, had no expenses, they wouldn't even be enough to cover the deficit.
Amazing.
But that's okay. Well, I mean, it should end well.
It's extraordinary times, so these deficits theoretically after this time should drop. Let's see what happens.
Yeah.
Anyway, let's get Charlie. I'm really excited and
and we'll be after the interview. We'll be back. We'll actually be back in 45 minutes from now for the rest of the.
I don't see Charlie in the house, Chair. Yeah.
Okay.
You don't? Okay.
I sent him a message.
Okay.
So the
Well,
new
we can
time,
continue.
but I let them know a few times. I have to let people know a few times about the new
Sure.
time.
Yeah, better safe than sorry, right?
Yeah.
Okay, do you have
Um,
anything you wanna have a look at, Steve? We were talking about gold in the chat room, and I was looking at the weekly chart, and it just looks like such a nice correction after this move from
it is beautiful.
the lows of September 18. It's been nearly a straight line up, like a 45-degree
Yep.
line up, and now we're correcting. We're gonna, I think, if we get to the 38.2, which is around 1730, if I recall, or even the 50% retracement, that's in the low 1600s.
I think this is a massive bull flag.
Bull flag, yeah, exactly.
And for people that might think this is too long to be a bull flag, really?
Yeah, look at
Just
the,
look-
yeah, exactly.
Yeah,
Put
look
it
at
in
the move
perspective.
higher.
Yeah.
Yeah,
I think if we get to that 1720, that would be an amazing place to just start loading up.
I think
1680.
1680, wherever it is out there.
Yeah. Anyway, anywhere in that neighborhood.
I think it is. I think it is highly likely that we can see a lower low, but I think that's going to be the place to start loading the boat.
Charlie's here.
Okay, because I think that
Great.
eventually this is going to break out and explode higher, literally explode higher, and probably that's squared for silver. Okay, let's enjoy the interview and we talk more about the rest of the financial markets in 45 minutes.
Okay, Charlie, waiting to hear you. How are you today? Welcome back to Face.
Somebody had a haircut.
Yeah. So, Charlie, waiting for you to unmute.
Is that the side effect from the vaccine?
Yeah, his hair were cut off. Yeah.
Oh, I needed one. Hi, Charlie.
Hi, guys. How are you?
Good. Great to have you back. You want to use the vid cam? I want to make sure you're still as handsome as you were last time. And don't worry, we don't have a bromance going. It's just
okay.
respect.
Not that there's anything wrong with that.
Okay. Thanks, Charlie. So,
if you need, we can all leave and let the two of you.
Anyway, for those of you who don't know, and Charlie's reputation precedes him normally wherever he goes, but Charlie's a contributing editor on Fox Business, and he has a column and he writes articles for the New York Post. You're going to show your mug and use the camera here today, Charlie?
How do I do that?
You just see where it says video? There's a camera there at the bottom.
Oh, I mean that word video. There we go.
Yeah, video. Yeah, it's a hint.
Oh, here's where it's a problem.
Oh, okay. All right, there you go.
All right.
All right, Charlie. God, so much is going on with this transition of power. I'm not going to talk about the impeachment. I know it's not your beat. It was probably foregone conclusion before it started. But, something that you wrote probably a month ago, where you said that DA tax probes on Trump is going to be miserable for him, which I can understand. But you also said it's going to be miserable for the rest of the country. And, I would think that, as divided as the country is, that, a lot of people would enjoy seeing them twisting in with some type of IRS problem, or finally having to be, called on the carpet. So why would the rest of America be miserable about that?
Well, I mean, we're a heavily divided country. 74 million people voted for him. Right. A lot of people voted against him. I do think there's a need to move on, and I think one of the big things that do we really want to go through months and months of a gut-wrenching thing with Donald Trump? Now, if he broke the law clearly, unequivocally, let the chips fall where they may. But even this impeachment trial. Listen, as you know, I've been very critical of the president at times. Not so much on policy, but on personal, the way he comported himself. I've always had problems with that. If you go back over on the internet, you'll see this famous argument I had with people at Fox during the show Outnumbered, where I literally said to the other guests, I said, listen, he's the way he acts at these rallies, and this was back in 2016, by the way, wasn't just yesterday. I said the way he acts at these rallies is problematic, and he's inciting violence. I actually said that. So I'm not a fan of his, but I think that the country, if in a perfect world, we move on and we focus our attention on getting needles in people's arms and getting people out and getting people like me spending on vacation. So
I got my first vaccine yesterday, Charlie.
Yeah, I wish I can get it. My wife,
you're
cancer
just too young.
I know. Well, I'm not a cancer survivor either. My wife, who can get hers very shortly. And, hopefully I can get mine in April and I can be in somewhere in Vegas.
All right. Let's move on to the economy. Okay. And what's interesting is, everything's going up, Charlie. You didn't have to be a genius. You could throw a dart. Housing has exploded, took out the pre-crisis highs in many areas of the country. You have marijuana stocks, commodities are going. I mean, people use the 2000 .com analogy, but even back then, Charlie, it was mainly .com. Commodities were in a bear market. It was really one big show, and now it's everything. You could be long the world, and most asset classes are rewarding people, not just rewarding them, but giving them windfall profits. In real estate, I've heard recently, people are making cash offers over the market, over the offer, and still there's bidding wars, and they can't close on a housing deal. So you wrote that housing might be behind the 2008 ball. And I believe you were talking about the governmental agencies like Fannie and Freddie, that there's still, ghosts from the past. I still don't know what happened to all that bad derivative paper from 2008, what garbage can they're holding.
The Fed holds it, doesn't it?
I have no idea. All I know is it's like it never happened. Just like, one time in my life, Charlie, I was a fiscal conservative. Well, forget about that. I mean, how can you be a fiscal conservative anymore in this type of environment that we're in? It's just, the days of Ross Perot and trying to keep the country's books straight. That went out the window starting in 2000. So what could derail this huge bull market that we have going in housing? Because that's a very important part of everyone's net worth.
Yeah, I mean, listen, what derailed it the last time was the fact that it just became so clear that people couldn't pay back their loans. I mean, that became that forget about whether Wall Street was responsible for derivatives and all this stuff. Yes, that made it easier for that juiced the market in many ways. But it came down to the fact that housing was became so expensive because there was so much free money and ways that people can buy a house that they couldn't afford, that when at some point they couldn't afford it. So if you were making 50 grand and you bought a house for $400,000, you just couldn't afford those payments, particularly if you took out one of those
negative
mortgages. Yeah, all that sort of crazy stuff that was going down. Gone was the day were the days. Like, listen, when I bought my house, when did I buy my house? I'm not going to give you every example, but I did put 30% down, and I was a working stiff journalist, not a guy who made a few bucks on TV. But I saved. It was my first book money. And I learned from my old man who bought his first house. We lived in an apartment in the Bronx, and we moved to Westchester. He bought his first house, I believe it was for $16,000, and he put 20% down. Now back then, as you know, 20% of 16,000 is not a tremendous amount of money, but it was a lot of money for him. I think he borrowed half of it from my grandmother, and then he paid her back, and it was a big thing. But he put 20% down.
Yeah.
Okay. On a $16,000 house. People didn't do that then. And now I think the lending standards are creeping back in that area. And on top of that, there's a lot of free money for rich people. You know what's fascinating about this gets back to the Biden budget. What's so fascinating about this $1.9 trillion package? There's so much stuff in there that's not needed. I mean, if you were telling me he's spending 1.9 trillion to give money to people who like hospitality people and bartenders, restaurateurs that are just out of business, that need the cash, okay, all for it. If you were telling me he's whacking it between that and getting vaccines to people, which, by the way, the vaccine is probably the best stimulus package you can have, I would be all for it. But there's a lot of stuff in here. There's rewarding of states that, just summarily shut things down, like New York State. I tweeted something out early on that New York State was facing like a $50 billion budget deficit with the MTA and everything. I remember some clown from Bloomberg, kind of laughing at me. Oh boy, that's a lot of money. Are you sure you're right? It came out today at 63 billion. The reason why that is because New York did very harsh lockdowns. It didn't really manage this thing. It closed its economy totally. Florida didn't do that. And by the way, the rates of infection of COVID are not like that much different, we should point out. So my point is that why are we rewarding states that didn't manage that? By the way, anybody can close everything down. Gavin Newsom closed down outdoor dining in California.
I live
60 degrees. Oh, it's just insane. I mean, outdoor dining. So,
I could make a tuna sandwich and walk outside, Charlie, and have outside dining.
Yes, that's outdoor dining. You just point to the absurdity of it. I mean, why should we be like some guy in Florida, some taxpayer in Florida, be subsidizing Gavin Newsom for not managing the crisis, or Andrew Cuomo? And I think that's in the budget also.
Or how about Robert De Niro receiving those forgivable loans? I mean, there are a lot of very wealthy people that went for those forgivable loans that that didn't need them. I mean, there has to be some kind of
brokerage teams. Think about it this way: brokerage. If you were an independent financial advisor, so I covered this space, so I know a little bit about it. During this time, you did okay, just because the Fed was. I know the market went down to 18,000, but the Fed was printing money and doing all this stuff. That was a subsidy to your business. From monetary policy was a subsidy to your business. On top of that, you could apply for one of these PPP loans, whatever they're called. And why should you be given that? Why should a guy who makes $100,000 a year, through this whole crisis, his lifestyle has not been impacted because he can work from home. He's not out of a job. Get some free money, which I hear that the free money goes to people that, I heard as much as $300,000 families with a combined 300. I mean, why? They're working.
I don't
get it. They're saving like crazy because they don't have to go to work. They could do this sort of stuff. I mean, I'm just saying that there's no rationale for some of this, and at some point, the piper gets paid. You know what I'm saying? Will we get inflation? I don't know. I kind of think at some point when everybody's free, we're going to be spending like crazy. This money goes somewhere and causes some economic dislocation. And maybe that's the trigger for the market to change course.
Well, I think the easiest thing for the sacrificial lamb in this cycle will be the dollar. Because it can make depression invisible. And make everything go up in nominal terms because the dollar's depreciating.
Yeah, that's a possibility.
Yeah, so I also want to talk about the new landscape. I don't even remember the name of the past SEC chairman, but Gary Gensler. Okay, he made very little news, didn't he, over the last 4 years? Well, Gary Gensler is a well-known entity, chairs the CFTC, and in one of your articles, you made a point that although he came out of Goldman and, the typical banker mentality, that he's gone through a metamorphosis where he's embraced Senator Warren's type of philosophy and Janet Yellen. And with all this action going on with GameStop and Reddit, and we'll get to that, and Robinhood, do you think he's going to be a hard taskmaster and and try and calm down the market. I'm even hearing things, a friend of mine told me that some congressmen are discussing a day trade tax. There's going to be all of this stuff out there, isn't there?
Yeah, I mean, it's all going to get an airing. I mean, when you have a seminal event like this GameStop frenzy, that's a shorthand for what happened over the last month. I mean, you're always going to get people looking at it and reacting to it, and now because the levers of power have moved sharply to the left. If you think about it, you have you have pro-regulation people in all the congressional committees. I mean, next week, Maxine Waters is going to be chairing a committee that is looking at GameStop. I mean, she's one of the most progressive members of Congress. So you're going to have that. You have Gary Gensler as the SEC chair. But Gary Gensler is a really smart guy. But he's just look at what Warren has said about him. She basically said he's the greatest thing since sliced bread. Biden himself, never really an anti-Wall Street guy, but he has to play to the left of the party, the AOC types. So you have that, and then Elizabeth Warren is in a position of power now. I mean, the one of the most progressive politicians in the country is on the Senate Finance Committee, I believe. Check me on that, but she's a ranking member.
Well, you have to admit, though, that Warren was on top of things in 2008 about what the dangers were with the derivative market and housing market.
I covered that a lot. I mean, listen, she talked a good game. I mean, Larry Kudlow, my good friend and soon to be colleague at Fox. We were at CNBC at the time, and he had her on regularly. Yeah, she was. I still don't think derivatives were the reason why we had a financial crisis. There was a lot of reasons why we had a financial crisis, and I think the core reasons, easy money from the Fed and government intervention in the housing markets, is something that she never called. And that
started under Clinton, pretty much. Then when he changed the tax laws, where could. Yeah, go ahead.
It was Clinton. It started on the Clinton on the tax side. It started under Clinton on prodding Fannie and Freddie to expand their portfolio. A HUD secretary named Henry Cisneros and another HUD secretary named Andrew Cuomo. And by the way, George Bush never changed it, and I can't remember who his HUD secretaries were kind of less flamboyant, but they were doing the same stuff. And then Fed monetary policy, those were the drivers. And then you throw in Wall Street, of course that lights the fuse, and that's what happened. But I don't remember Elizabeth Warren commenting about that stuff. She was very quiet. And by the way, Wall Street's always easy to pick on, isn't it? I mean, anybody can beat up on a bank.
Yeah, it's easy to pick on because that's where the money is.
Yeah, and they're evil and allegedly evil, and it's
we're all a bunch of hucksters, Charlie.
Yeah, I mean, like politicians aren't hucksters. You know what I'm saying?
Yeah. Why did what was the motivation for Steve Cohen to reopen a hedge fund after the GameStop incident?
Yeah, Bloomberg ripped off my story on that. I was a little perturbed. Let's
go to the office, Charlie. Me and you. They'll sweat a little bit.
Yeah. No, I have. By the way, I have a lot of friends there, and they looked for a way to try to not give me credit. I do that with them too. So I'm grousing here. Well, we just to make a point is, I broke the story that he opened this hedge fund amid the fact that after he took a huge loss in Melvin Capital, which was the one hedge fund that almost went under from the GameStop frenzy, because it was in the middle of a short squeeze. He took a huge loss because he was a big investor in that. I mean, he had a ton of money in that. I mean, Point 72, which he runs right now, had a ton of money in Melvin. On top of that, he threw him I think a $750 million lifeline. I checked my numbers on that. It was, he and Citadel put money into the fund. And then right after that, I got a call from my sources at the brokerage firms that he was opening up. Like, for example, Morgan Stanley got I think it was $100 million window. And in Bloomberg, in trying not to cite me 2 days later, said that he raised about $1 billion for his fund. And you know, Steve's people told me he's doing it because he thought now was a good time to do it. It has nothing to do with the Melvin thing. You know, you can believe that, or you can believe the logic, which is, you know, he had people wanting to get in the fund, and now's the time that he needed it because he took a hit on Melvin.
Does he do a lot? Is he known for playing the short side of equities? Is he known for being a bear?
They all do.
All right. Well, maybe that's one of the reasons. I mean, you have.
He was,
you know,
but
Goofy.
he was short. No, but he was short via his investment in Melvin, who was short those stocks.
Okay, so maybe he's seen everything that's happened with marijuana stocks, with everything, Charlie. You name an asset class or sector, hard to find a bear.
I mean, I've written a lot about Steve Cohen over the years. I wrote a book, Circle of Friends, about how the government tried and ultimately failed to nail him on insider trading.
Right.
You know, he's a brilliant trader. Okay. And he's a good businessman, and you know we should point out that the government never charged him with insider trading. They charged his firm. They believed it was a hotbed of insider trading, so they closed it down. But they never got him. And insider trading is a very difficult thing to prove. And you know, it's more than just trading on information that's not public. It's you got to show that you stole the information. There's a lot of steps involved for good reason, because you know there's something called the First Amendment. We all go out there and research stuff. You know, there are very fine lines between people researching and stealing information. There's a difference between information flowing 5 steps down to me and me making a trade, and me pulling a Bud Fox, disguising myself as a janitor, going into some law office and stealing the papers. You know, that's
right.
You know, and so Steve, they never nailed Steve on that. So he gets a bad rep sometimes on insider trading issues, but he's a smart trader. And I'm sure I don't know what his positions are. He doesn't, you know, necessarily, you know, announce them. You know, he's one guy that doesn't announce what he's doing. But
maybe the Bobby Axelrod character was kind of formed on Steve Cohen. What do you think? Who's the closest thing to Bobby Axelrod?
It's not even. You know, like I said, I know the guy who they theoretically modeled wax over. Remember his number 2,
right?
Nothing like that guy. I mean, the wax guy is the number 2 for Axelrod, is a guy that does drugs and you know who knows what. The guy that at the SAC, who was Steve's number 2 a long time, is a good looking big weightlifter.
Okay,
doesn't do any of
Hollywood,
that.
Charlie. All right, you know, I want to get to what really is a massive movement. So, you know, the pandemic, it's hard for me to believe that the public has this type of muscle in the markets. You know, I was trained, you always fade the public. You know, they're always late to the party. They get long at the tops. They puke at the bottoms. So I want to talk about Reddit and these chat rooms becoming a new force in the market. So you say not me. And this was really, wasn't it because of the pandemic that people had to find something else to do? They couldn't bet on sports. There was nothing. And so they just gamified stock trading. And you think this has staying power, even if they have to go back to work?
If you Google my name and Robinhood, you'll see a column I wrote for the Post in I think it was August, where I said essentially that you know we're creating a situation between free money from the Fed, free money from the Treasury in these checks, you know, shutdowns, limited sports. Back then it was limited. Right. So what are people going to do? They're going to do this, and it never ends well. We should point out that as much as some people got out of that GameStop trade, a lot didn't. Probably a lot of people probably bought at 500, and then lost all the money. I don't know what it's trading at today. I stopped. I think it's in the 50s now. But
I think they mainly lost option premium. So along the way, if they were buying calls, They were cleaning up.
Yeah, you're right, and you're right, and that would hopefully that's what a lot of people did. Listen, I have no problem with this.
Power to the people.
I mean, okay, I don't want to
bail
them out.
The hell with algos and high frequency traders. Why not let the public
This is the free market. And by the way, one of the things I did tell Dan Gallagher, who's a friend of mine, who's the general counsel of Robinhood, when I did the column the first time, because he thought I was a little tough on them. I said, one of the things I think the problem with Robinhood is that it incentivizes, it turns this into a game a little bit too much. And I thought they stepped over the line. This is just personally. I don't think they stepped over the line legally, but I just think gamifying it is a problem because then you do really get this stupid money in there. But to be honest with you, I'm all for this. People want to trade, they want to talk on chat rooms, go for it. By the way, I seen something come up from the Forex gal. She goes, free market, Robinhood wouldn't let them trade. LOL. Here, let's just reality base this thing. Robinhood makes more money the more they trade. Right. Okay. The more they trade, they could sell more order flow to Citadel. Okay. The reason why Robinhood stopped the trading, is because they're not Morgan Stanley.
They didn't have the cap.
They didn't have the capital for the settlement. And it's just, it's so obvious. By the way, if these hearings focus on this, they're going to end in 10 minutes. These hearings next week. Like, tell us about your cap, and I'm sure Vlad Tenev is going to turn around and say
there is an alternative interpretation. There are some that say that the reason they capped it is because the same funds that actually buy the flow from them told them that unless you put a stop at this, that it makes us bleed, we're going to stop buying the flow from you.
Well, let me ask you this. If you saw who they sell the flow to, they sell 60% to Citadel, and they sell, there's a number. I think the rest of it goes largely to Virtu. Why would Virtu, give a shit about Melvin Capital?
Perhaps because people at this stage, as you very well, you've been interviewed now for 30 minutes. You've already mentioned 15 famous people that you're friends with or know. That doesn't only apply to you. You know what I mean?
Wait. I'm not telling you mention 15 famous. First off, these aren't famous people. These are people.
No. But they are people in the same industry. You know what I mean?
People in the industry, right? And that I get paid to talk to people in the industry.
Yeah.
No, I'm not saying something bad about what you said. As you know people in the industry, these people also know people in the industry. They know each other. So it might be like, I'm at a very tough spot. One day you might be there yourself. Please help out. You know what I mean?
It's possible. By the way, listen, anything is possible. We had a financial crisis in 2008. Donald Trump was president, and then what happened. I don't really think that Robinhood gives a shit about Citadel. It doesn't, and I don't think it cares about SAC Capital. It could sell its order flow to anybody. And it's a valuable commodity, because if you're really worried about this whole process, study, and I think it's worth studying. People gaming the payment for order flow system. That's a legitimate thing to study. But just the logic of the Robinhood bailing out Citadel just doesn't make it for me. It's possible. We should point out that it's one of the most easily detected scams in the world. They'd be idiot if that's the reason, they're gonna get their asses handed to them by Maxine Waters if that's the case. So that's probably not the case. And
let's look at the other side of the coin. Any regulations coming to these chat rooms like Reddit? Are they going to try and clamp down on that? Does Wall Street embrace it? And do the regulators and the people in power now embrace the force of chat rooms?
Well, we have something called the First Amendment. I don't know. Wall Street and regulators may want to listen. We live in an era where you could be canceled at any time. I mean, you know, the cancel culture is out there. These big tech companies control a lot of what is known as free speech over the internet. It's funny how they actually they both have protection from libelous speech, and they can monitor the speech. I don't quite get that. They have this Section 230 of the Communications Act where it's a safe harbor. So if someone puts on Twitter something nasty about me, that I'm a criminal, I can't sue Twitter for not taking that down, to be honest with you. That plus they monitor speech. So everything is, you know, everything I guess is on the table. I will say this, it's going to be hard for them to just crack down on chat rooms. You know, I mean, what is I mean, you know, there is a First Amendment. People say all sorts of shit when you walk on the street. You know what I'm saying? Right. You're going to crack down on everybody saying anything in a public forum. There are laws already on the books. If you manipulate a stock, if you pump and dump via chat rooms, you could be. That's, you know, you could, if it's provable, which is a very difficult case. I was the first to report that the SEC was looking at a pump and dump market manipulation case, and now the Justice Department's in it. It's even more remote for the Justice Department to bring a case. These are
and it usually happens in lower tiered quality issues like bulletin board, pink sheet.
Oh yes.
I mean, that's the arena for it.
Yeah,
so,
it's stocks that are thinly traded that you can get. You can easily trace the pump and the dump, and also the. I mean, you know, and probably the
dump is the CEO selling into the volume that he paid for to bring in. So, you know, I've seen that. You know, I'd like to wrap it on this, Charlie. And I heard this story, and I don't consider myself a socialist at all. But the story is, you know, during the pandemic, we were all, you know, especially at the beginning, the run on toilet paper. You know, the joke is that there was, you know, a roll of toilet paper hidden in a pound of cocaine, you know, because toilet paper was so valuable. But, you know, I look at the grocery stores, and, you know, all through this, they kept us going, you know, and I had groceries delivered, and there were, you know, the workers were there stocking the shelves and bagging it and ringing up the register. And Kroger, you know, did pretty well during the pandemic. You know, they had I think they made an extra $1 billion. Right. And why couldn't they have used that to pay their people combat pay, hazard pay, rather than stock buybacks? Does that make me a socialist, that I think they should have gone and rewarded people for keeping their business going and with the risks that they were taking every day to feed America?
Well, the people got paid, you know, presumably, you know. I would like higher wages. You remember, companies have fiduciary responsibilities, not to their employees, but to their shareholders. And you know,
therefore buybacks.
By the way, if their business is going through the roof, they have to hire more, and they presumably have to pay more to attract workers. You know, that's the way I think it should work. That's called capitalism. I have a problem with, you know, the government coming in and, you know, saying, oh, you can't buy back stocks, can't do this, can't do that.
Well, then don't you have a problem with the airlines having used all the profits for buybacks and then coming hat in hand with COVID and saying, bail us out?
Yeah, I do have a problem with that. But I mean, there should be listen, if you're there should be strings attached for government bailouts of companies. Okay, I have no problem with that. Where I have problems is government telling, you know, the heavy hand of government telling a company how to manage its finances.
Right.
You know, but you know, here's the thing. You know, I had a running argument with people about Fannie Mae and Freddie Mac, the two general GSEs, government-sponsored enterprises.
Yeah.
And because a lot of the shareholders said, you know, the government took them over and stole and after even getting paid back, kept sucking in the profits. And these are private companies. And I will say, well, let's be real clear. First off, they were never really private companies. They were both created by Congress right? Remember, they were known as GSEs because they had some nominal backing of the federal government. They borrowed at rates that were treasury rates. So investors thought they were part of the federal government. Then they get bailed out by the government. Once you get bailed out, if you want this government assistance, all bets are off if you're a shareholder, as far as I'm concerned. Then that's where your rights, and the Supreme Court's going to rule on this. I don't know where they may disagree with what I'm saying, but I'm using my logic. Once you take bailout money, it's open season on you. But before that, I think companies should be able to operate as companies,
Okay. All right. Well, Charlie, I always ask people, what's your most valuable currency? And they'll say, well, it's a euro, it's a dollar, it's gold, it's Bitcoin. But to me, our most valuable currency is time, because money comes and goes. Time is gone forever. Thanks for spending some of your most valuable currency with us this morning, Charlie. It was great having a conversation with you, buddy.
Lot of fun. Thank you.
All right. Good hunting. And I hope next time we talk that you've been inoculated at least once.
I hope so.
All right,
too.
partner. All right. So that's a wrap. Charlie Gasparino, everybody. And everyone have a great weekend. Remember, don't just count your chips and your cash and your shares. Count your blessings, and we'll see you all Monday. Adios.